Hello everybody, my name is Matt Justice. I am here with Tackle Trading's update on the market today. And finally, for the first time in about a month, we are starting to see a little bit of the pullback that we have been waiting for, if not dying for. The question I have for everybody today is not whether this is a bullish uptrend, not whether the market's going to crash. It's simply, how do you identify support? If this is in fact a nice little bullish retracement on the S&P 500, how do you identify support? Well, I like to look at a few different ways where you can identify a strong level of support. I like to look at 5 main ways. The first main way you can identify support level is a prior pivot. The prior pivot is typically fairly easy to identify. Look where the last time that the stock started going down, or in this case the market, and that is your prior pivot, and it is right there. And so the market can retrace into that level. It would not surprise anybody if it did. The second way you can identify it is an easy way. I'm not a huge fan of it, but I do like to bring it up, is a simple moving average. Simple moving averages are an average closing price over a given time frame. On my chart here in Mock Trader, what you see is a 20 period moving average and a 50 period moving average. The 20 period moving average can be a short term or a minor level of support. The 50 period moving average can be an intermediate level of support, and as you can see during this last retracement, just in this ballpark right there, where did it come into? It came right into the 50-day moving average before it started going back up over the last month. And so that can be a level of support as well. And the reason I like them for beginner traders is because you don't really have to do a whole lot of work to identify where that 20-day moving average or the 50-day moving average is, for that matter. It is what it is. It's there on the chart. The third way you can do that is you can identify a significant whole number. Well, in this case, you don't get much bigger of a significant whole number than right here at 1600, which is also a prior level of resistance. Remember, support and resistance, it is not a finite number. It is a zone around that level. So both your prior pivot and your significant whole number are fairly similar. They're right in the same area on the chart, so it certainly could provide a very strong level of support. And if the market does come down here and does pivot, start going back up, that might be a wonderful entry point for not only some swing trades, but certainly some position trades out there in the marketplace as well. The fourth way you can identify where support and resistance are, you can simply draw a nice little trend line. To draw a trend line, you want to connect the dots. Everybody remembers connecting the dots when we were growing up, right, in the coloring book? Well, we're simply going to go to the bottom of the trend here, and I'm going to connect different support pivots going further up. And as you can see, in the future, as that stocks or market starts to retrace back down, it can certainly come into that trend line as well. So we are preparing to take action, guys. We prepare everything. We don't guess. We don't guess in any capacity. We prepare. So when this market retraces, we are prepared to take action. But I did want to bring up one last way you can identify where support and resistance is, and that is a Fibonacci retracement. A Fibonacci retracement is a wonderful way and a very strong way to determine where a support level will form if in fact this is a nice little retracement. What I'm going to do is I'm going to click on my Fibonacci tool over here on the left hand side of Mock Trader. I'm going to draw your retracement up to the top, and these numbers right here represent a percentage retracement against the prior motive wave. A standard retracement is right around 38 to 50%. That's where I'm anticipating this market coming to, somewhere between 1624 and 1606. And if it does come into that 1592, which is right in the area of 1600 as well, that's a great level of support as well. If it gets under this 75%, that is not a retracement any longer. You might want to keep an eye on some type of reversal pattern. I wanted to bring that up so that you guys could prepare for the identification of support as well. If you have any questions, go hit us in the Tackle Trading forum or make comments after the video you hear, and we will be on next time to talk about credit spreads. Thanks everybody. I'll see you next time.